Welcome to my podcast where I talk about all things related to money mindset, finance, business, and investing. My name is Royston Camberbatch, a qualified accountant with over 30 years' experience in finance and business. Coming from a very humble background, I have continuously challenged the assumptions and the expectations of what I'm capable of achieving for myself and others. Over the years, I've helped hundreds of entrepreneurs to decipher finance and to make more money and to run highly successful businesses. On this podcast, I will share with you tips, strategies, techniques, and tools that you can use to make more money, manage money better, and to maximize your success. Welcome to episode 7, and so much has happened in the last week or so with us going into a second lockdown. Obviously, things are changing over in America as well with the new president. And I also heard in the news recently that the government was also borrowing more money as well as printing 150 billion of obviously money to put into the economy. Also heard as well that business owners are borrowing 5 times more the amount of money they were borrowing before COVID. And today I want to talk about, debt and why debt is sometimes necessary in order to, whether to grow a business or whether it's to, build your wealth, because obviously some people have a stigma of debt, of not wanting to borrow money, not wanting to use debt. But I think sometimes debt is just necessary. So I want to talk about that today as well. I want to talk about wealth as well, and what is really wealth? What do you see as wealth? Because for some people, wealth is just having a lot of money, right? For me, I see wealth more as a mindset, to be quite honest. I see wealth more as a way of thinking. And obviously, a healthy mind is a healthy body, and health is wealth, So for me, if you have peace of mind, if you're healthy, to me, you are wealthy, obviously. And to be healthy means, you have a healthy body and a healthy mind, right? Not just talking about the physical element, talking about the physiological element, or the psychological element as well, right? So I think wealth for me is broader than just having money, right? Because we know people who have money, for example, and they never really live long. So let's go back to the debt issue. So as a small business owner, you're having to borrow more debt just to keep your business going. Obviously, and we know that many businesses in the first case, they start up, with obviously the owners are putting in a bit of small money in, or bootstrapping, or also sometimes the owners have to borrow money as well to put money in. But in hard times like these, right, your cash reserves are basically being depleted, and you now have to, in order to survive, you have to go and borrow money, right? And what's important here is that you're borrowing this money, but this money is basically being used not to obviously invest in assets or invest in infrastructure or invest in things that are going to make income. It's just for operational expenses. And this is not ideal, So that's why I always try to encourage business owners, to have a strategy whereby you maximize your free cash flow and whereby you build up your cash reserves, so you can withstand any recession. You understand what I'm saying? Even me, myself, I personally believe in investing in assets, Because even in tight times like these, you can liquidate your assets, right? But if, for example, as some people who I know, they just spend money, they get their happiness from spending more than they get from saving. And that's why for me, wealth is, to be quite honest, a game of emotion. Yeah. I would even say, even business success is a game of emotion. So what I'm saying is, if you have debt, one of the ways to eliminate the debt basically is to save money, right? Because or reduce your operational expenses. So you have to take a hard look at some of the things that you are spending on in your business and say to yourself, are these things needed to create revenue? Are these things contributing to create my revenue? And I know a few business owners who, because of COVID, they've taken a hard look at all the operational expenses. Basically, they're going line by line on their P&L, and it goes, do we need this expense? How is this expense contributing to revenue? And I will encourage each business owners right now, even if you have to borrow money from the government or you're having to, I don't know, take money from the banks, which obviously is kind of drying up these days, you know what I mean? However you are borrowing the money, right, or whether it's just a government loan, government, obviously grants are good. What I'm saying here, if you get in this money, you still have to evaluate and say, what am I using the money for? Because the reality is, you have to really take a stock and say, look at your balance sheet and say to myself, is my business really worthwhile? When you look at your net worth, when you look at what is called like, your wealth statement, I call it like, your personal balance sheet. That's one way of looking at your wealth, right? So what do I own minus what do I owe? And if you find that you owe so much that even if you take on more debt, then you think, how do I service that debt? Because see, the big thing is not just borrowing debt, it's how do you service the debt? Then you can say, wow, it's I can't service it, you know what I mean? It's not even worthwhile borrowing the debt. I'm saying these are some serious times and some serious questions that you have to ask yourself, Maybe sometimes it's best closing the business down, basically becoming insolvent. Because if it's a limited liability company, then there's no impact to you, you file for insolvency on the company and you start a new company. Sometimes you have to do that, you see. What some people do is that they end up in debt and then they feel that they have to try to keep, trying to dig their way out of debt, you know what I mean? And it never really happens, So I'm saying taking on debt is sometimes necessary. But when you're trying to build your wealth, you have to take a good stock check, look at your personal balance sheet, look at your business balance sheet. I have covered this in my previous episodes, exactly what the balance sheet is. It's a statement of what you owe and what you own. I'm saying even if you have debt, you have to really take a stock and say, look, what I owe is so much, that even in this challenging time, it might just be best, to file for insolvency and go again. While, it sounds harsh, but the reality is that many businesses will have to do that rather than just taking on more debt, you know what I mean? Because I covered in my cash flow statement, I think it was in one of the previous episodes, that they're cash from different areas, right? And they're different kind of cash flow. And ultimately, from operations, you should be making enough revenue or enough income, from, your goods or services that you sell to cover your operational expenses. Or if you have investments, you might be getting investment income, or you might sell an investment and then you have some gains on investments, right? Or if you put money into an investment called like capital expenditure, that is obviously one type of cash flow. We call that investing cash flow. And financing cash flow or even funding, to me, it's really about buying assets. It's really, you should be using that funding to invest in income generating assets. But if you're having to use the funding just to pay your operational expenses, to me, you have got to take a hard look at where you are right now. But let's face it, even if, closing down your business is not an option, one thing that you have to do is to look at your P&L and look line by line and just say, do we need this expense? Is this expense contributing to revenue? Because let's face it, as I said earlier, business success is really a game of emotion. Is how do you feel when it comes to cutting cost? If cutting cost make you feel good, you're probably gonna have a successful business. If cutting costs, you think, no, it gives you pain and you just want to have unnecessary cost in your business just for the sake of saying that, you have certain things in your business that are not really adding to revenue, it's quite likely that, you will end up in bankruptcy at some point in time, especially if you have a lot of liabilities. So I'm saying all this today to say, look, with these challenging times, with the second lockdown, with businesses obviously being impacted, business owners have to take a hard look at the balance sheet, take a hard look at the debt, take a hard look and say, okay, can we keep funding? Can we keep funding liabilities? Because how much money do you have to borrow to fund the liabilities? And maybe insolvency is a better option, So these are all some things that you have to do, which is based on financial intelligence, You have to make informed decisions by analyzing the information in your business to make the right decisions. You know what I'm saying? And one of the definitions, for example, of wealth, right, is that according to, I think, was Investopedia, it says, wealth is obviously a measure of all the assets owned, by a person, a community, a company, or a country, right? We're talking about here the market value, and obviously we're talking about here of all the assets owned. So even if you have an asset and you have a liability, you have to minus the liability from it. So I'm saying here, you have to take a stock of your wealth. Just see, if your wealth is being depleted, because of coronavirus, if you just, fighting a losing battle, you got to ask yourself some serious questions, you know what I mean? So this is just some of the things that kind of I wanted to talk about. As I said, myself, when I came to UK, I was quite a long time ago anyway. I was coming to study. I didn't have the money, and my only option was to borrow money. My only option was to take a loan. What I did, I took the loan from the Caribbean. I came here, I studied, I got a job, and then the first thing I did was to evaluate, okay, what is the interest rate over there versus the interest rate here, and I got a loan from here, and I went over there and paid it off. Because see, the next thing with debt is that you really want to make sure that the cost of the debt is not crippling, or you want to look for, because you see, it's easy to say debt, oh, let me just take it on, right? But the cost of the debt is obviously an expense to you, which goes into your P&L, which obviously impacts your profit. So you really want to understand that. So, there are some stigmas around debt. There are people who say, for example, debt, or I don't want to touch debt. Yeah, I remember my own grandparents, etc. Even there's some family members, even some friends as well, who, they're probably debt free, which is a great thing. But I myself, I don't believe in just having equity or having money in the bank and not using the money in actual money. You know what I mean? I think if you have money, you're debt free, then you should be helping people. You should be doing something. Of course, you have to have a cash reserves, but ultimately these things we die and leave them, right? So I'm just saying here that you have to strike a balance. You see, because here's the thing: some people who are, for example, are employees, sometimes they think they're safe, right? They think they're safe because they obviously have a job, but right now jobs are also cutting as well, and with jobs cutting, people being left out of pocket, sometimes they have to go into debt as well. You know what I mean? And it's kind of crazy, So there's quite a this time we're living in is kind of a debt time, really. It's a time when people are having to enter or go into debt to really just survive. You know what I mean? And for the few of us, or for some of the people who don't have to do that, that is really good. That's one of the reasons why, as I said, the business owners I work with, the people I work with, I try to help them to have multiple streams of income, help them to build up cash reserves so that they can withstand any recession. You know what I mean? So that's really, really something quite important. So I don't know how do you feel about borrowing money, to pump into a business, even if the business is failing? How do you feel? I remember looking at some of the case studies, right? Of whether it's Toys R Us or Blockbuster or Enron, etc. Some of these businesses, they have so much debt even at the time of bankruptcy or the time of insolvency. It's just crazy, you know what I mean? So I'm saying, you have to be realistic. While debt is sometimes necessary, you have to be realistic. So let's face it, right? With the government borrowing all this debt that they're borrowing right now, someone has to pay for it in the long term. Obviously the taxpayers, you know what I mean? There are going to be some kind of, after pandemic, there going to be some kind of fiscal reform. There'll be some drastic changes, and people have to pay for it, right? So it never comes free, you know what I mean? That's what I'm saying to you. When debt is dished out, the main important thing for me with debt is to know how you're paying for it. When you go into debt, know how you're paying for it. So why talk about debt? Let me talk about credit card debt specifically, because personally speaking, I had mastered. I don't really use it anymore, but I had mastered the technique of using multiple credit cards as well, and getting deals on credit cards, and having money for free for 2 years. Obviously, you pay a small percentage to get the money. I then use some of that money as well to invest in assets, to invest in properties, you know what I mean? And that was the clever way to use debt to build your wealth. But just remember here, I was borrowing the money, using the money to invest in income generating assets. That's the big difference. So you get the money from the credit card, and you can use the credit card, whether it's to pay down on the deposit. And if you have 2 years, for example, and you buy a property and you pay £300, for example, I don't know, for 30 grand on a credit card, in 2 years' time, you can remortgage and you can pay it off. In the meantime, obviously, the property you just bought is giving you an income stream. So you can obviously pay for the credit card as well in the meantime. So there is different tricks and stuff here in terms of how to use debt to build your wealth. You know what I'm saying? I mean, for example, one of my friends, actually my family, my cousin, what actually happened here is that he bought an apartment, right? So he bought the apartment. I'll just give you some rough numbers anyway. So he paid like around £400,000 for the apartment, and basically, yeah, it was rough. So the apartment needed to be gutted out. So he gutted out the apartment completely, and then he borrowed a loan. He borrowed 2 loans. To refurbish the apartment. So let's say he borrowed like I don't know, 40 grand. So that's now 440 grand. But immediately when he finished doing up the apartment and he revalued it was worth 500,000. So effectively, by borrowing 40,000, he actually put on an extra 100,000 value on the property. So by the time he remortgage now, he can then repay back this loans within 2 years, and his property is worth much more. So there are ways and means by which you can use debt as well to help you build your wealth. You know what I'm saying? There are means and ways, you know what I mean? And one of the things with credit cards, if you, I don't suggest actually doing it right now. I think I was talking to someone recently. Those deals are not around anymore. I don't see the credit card company writing people and sending them they can get 2 years interest free anymore. Things have changed. Those boats have sailed, you know what I mean? But even in those days, when we were doing those stuff, you had to have a number of different credit cards. And again, there's something called a credit utilization ratio. Let me just explain that quickly, right? So with the whole credit cards, you don't want to use just one credit card. You want to have you don't want to have one credit card. Let's say you have 5 credit cards, right? And each one of those credit cards have a limit of 20 grand. That's 100 grand, okay? And if you use one credit card to get 30 grand off it, say that credit card, I don't know, is a 40 grand limit, there's a certain amount that they will give you. And 30 grand over 100 grand is called a 30% utilization ratio. It does not impact your credit rating, So obviously I've gone fast here. There's a bit of trickery and stuff here. That's why, for example, I've really studied all this stuff. If you don't know, but I've actually used debt. I've used credit cards. I've used loans sometimes, to build up a property portfolio, to build apartments, to do all this stuff. And obviously I've repaid them all, you know what I mean? So I'm saying here that you can know how to move money around. It's one of the reasons I actually wrote the book, Money Management for Entrepreneurs and Business Owners. Mainly focus around the financial aspects of, business. But really and truly, if you know how to use the money, you can really use the money. You can borrow money to use money to make stuff happen. Because clearly, that's what the government is doing right now, right? We are impacted because of COVID. And what the government is doing, the government obviously doesn't want the economy to go belly up. So the government is actually saying, look, okay, let's go out there and borrow some money to pump back into the economy. But the government knows that longer term, how they're going to repay this debt, because obviously they're going to be taxing the people. You know what I'm saying? And there's many different taxes, indirect, direct taxes, etc. So all I'm saying to you as a business owner, right? Even if you're not a business owner, even if you are, an employee, you lost your job, and you think about borrowing some money to go into a business, all I'm saying is that borrowing the money is never really the matter. What the matter to really answer is, how am I going to pay it back? Because you have to have enough income streams to pay the money back, to avoid losing your credit rating, to avoid losing your credibility. As I was saying earlier, as a business owner, if you have reached a stage you're borrowing money just to pay back operational expenses, just to fund operational expenses, then because your income stream has dried up, your back is against the wall. Because what really should be happening is that you should be getting enough income to obviously deal with all your operations as well as to pay your debt. You know what I'm saying? Because debt should be used to buy assets, and those assets should be then be giving you income streams. I hope that makes sense. You know what I mean? So look, I'm not going to go on with this podcast for long and long and long. But what I do want to say, the whole issue of saving and investing, etc., is about emotion. Because if you're in debt, for example, one of the best ways to eliminate debt is to have a budget. And I remember I was talking to one of my clients recently, and she had debts actually. So she had debts of around 70 grand. And I was talking to her, and I said to her, one of the strategies that we're going to use, right, is that we're going to avoid you having a poor credit rating. I mean, she already have a poor credit rating. What I did with her, I said, look, let's call all the people you owe and let's do a deal with them. Because the main thing with debt is to pay the debt. Let's do a deal with them. Let's pay them at least £1 or £5, a month. And all the people agreed a deal with her. And then say, okay, what you then need to do is have a budget, a strict budget of exactly how much money you're making. But the main thing you want to do when you have debt is that you want to make more than you're spending. You want to save more than you're spending, or make more than you're spending, you see? And once you start to save some money, you want to look at which debt has the highest interest rate and start paying that off first, you know what I mean? But this particular client, although I worked with her and I said to her, this is the budget template. I had a couple of sessions with her. I gave her the actions to do the budget. She's still telling me, oh no, I can't do the budget now because I got some more big expense coming first and I will do it. No. You have to get into the discipline of doing the budget and then doing the budgetary control. The budgetary control is where you then go and say, right, this is my budget and I'm supposed to only spend this amount of money, even including paying off my debts. I'm supposed to have this amount of money extra to pay off on, say, a little bit extra on my debt with the biggest interest. And if you have to go over your budget, you should be able to explain it. Now, why am I telling you that you need to have a strict budget even to reduce debt? Because, it's an emotional thing. You want to try to learn, get happiness from saving, get happiness from not spending money. You see, the happier you are not spending money, the wealthier you are likely to be. You know what I mean? If you are happier just spending money, basically, ultimately, you might end up spending more than you make. And effectively, you're bleeding money, you're leaking money. And that's when you have to go and borrow money. So I'm just saying, there are some tricks and bits and, hopefully you pick up some essence of what I spoke about here. And the whole essence of things is that as a business owner, as an individual, what you really have to do is to look at your personal balance sheet, Look at all what you own, look at what you owe. One way to know what you owe, to be quite honest, is to do a credit check. Do a credit check. Get a credit report and see all what you owe. Then take a statement of all what you own. What are all the things you own that has a market value that you can sell? Minus one from the other. And that is one way of actually measuring your wealth. It's only one way of measuring your wealth. That's a physical way of measuring your wealth. For me, as I said, wealth for me is a way of thinking. Wealth for me is having good health. Wealth for me is being able to go and sleep and not having to worry about paying debts. You know what I mean? Wealth for me is waking up every day strong and healthy and having a visionary mindset. For me, wealth is a way of thinking. You know what I'm saying? And for some people, wealth is just, having money in the bank, sitting down there doing nothing. You know what I mean? That for me is not wealth. You know what I mean? So, guys, I hope this kind of makes sense to you in terms of this podcast, you know what I mean? And as I said, in recapping, if you're a business owner and if, you find yourself, being squeezed by this pandemic, find yourself in a very sticky position, take your P&L, sit down with your accountant, do a line-by-line review of all your expenses for the last, 2 years, and just say, what expense can we replace? What expense can we delete? What expense can we, find a cheaper way of doing it, you know what I mean? Or, and that kind of stuff, and try to reduce your operational expenses. And ultimately, by doing that, you'll be cutting down the amount of money you have to pay out out. And if you have any debt, always service your debt and service it on time. That way you are then maintaining a good credit rating. So hope this makes sense. This is me, Royston Andrew Cumberbatch, and until next time, do take care. And if you like this podcast, do share it or comment on it or like it, whatever you can do. Yeah. So take care and bye-bye. Thank you very much for listening to my podcast. I hope you enjoyed the show. You can find out more about me by Googling my name, Royston Cumberbatch. I'm on all the social media, Facebook, Instagram, and LinkedIn. You can find me on YouTube as Roy Cumberbatch. And if you are listening on YouTube, please hit that subscribe button. Or you can find me on my website at www.racmacs.com. That's RACMACS.com. It'd be great to hear from you. And do feel free to tell me about any topics you want me to cover on future episodes. Until next time, be good to yourself and others. Keep positive and reaching for your financial goals. Bye-bye.